Imagine waking up tomorrow and oil is no longer $80, not $120, but $200 per barrel. Gas prices explode. Flights become unaffordable. Food prices surge again. Stock markets panic. Governments scramble. And suddenly, the entire global economy begins to slow down. This is not science fiction. Analysts and energy experts have warned that a major disruption in the Strait of Hormuz could send oil prices toward $150 or even $200 per barrel. But what would actually happen if it did? And why could one narrow stretch of water affect almost every person on Earth? To understand the danger, you first need to understand the Strait of Hormuz, a narrow waterway between Iran and Oman. It may look insignificant on a map, but nearly 20% of the world's oil supply passes through it every day. Millions of barrels of oil move through this tiny corridor. Oil from Saudi Arabia, Iraq, Kuwait, the UAE, Qatar. Much of the modern economy depends on this route staying open. Because oil is not just gasoline. Oil powers shipping, aviation, manufacturing, plastics, fertilizers, food transportation, modern civilization itself. Much of the modern economy depends on this route staying open. Because oil is not just gasoline. Oil powers shipping, aviation, manufacturing, plastics, fertilizers, food transportation, modern civilization itself. And when supply suddenly disappears, prices can rise violently. Analysts now warn that if the strait were blocked for an extended period, oil prices could potentially approach $200 per barrel. The first thing people would notice is gasoline prices. In many countries, gas could rapidly become painfully expensive. Experts have already warned that major oil disruptions could send gasoline prices dramatically higher. But this is where most people misunderstand the problem. High gas prices are not the crisis. They are the signal. Because once transportation becomes expensive, everything else follows. Trucks deliver food. Ships move products. Airlines move cargo. Diesel powers global logistics. Suddenly, groceries cost more. Shipping costs rise. Airline tickets surge. Construction becomes more expensive. Inflation spreads through the entire economy. Oil is like blood inside the modern system. And when blood becomes scarce, the whole body suffers. Central banks spent years trying to control inflation. But a $200 oil shock could restart inflation globally. Not because consumers suddenly want more products, but because the cost of moving and producing everything rises. Economists call this cost-push inflation. It becomes especially dangerous because governments cannot easily fix it. Printing money does not create oil. Lowering interest rates does not create supply. And if inflation rises again, central banks may be forced to keep interest rates higher for longer. That means more pressure on housing markets, more pressure on debt, and slower economic growth. Some analysts warn that a prolonged energy crisis could even push the world toward recession or stagflation. Then comes the financial markets. Investors hate uncertainty, and oil shocks create massive uncertainty. Companies suddenly cannot predict costs. Airlines suffer. Transportation companies suffer. Manufacturing margins shrink. Consumers spend less. Economic growth slows. Markets begin pricing in recession risk. Some sectors may benefit temporarily. Oil producers, energy companies, defense contractors. But many parts of the economy would feel pressure. And according to analysts, the greatest danger may not even be high prices themselves. It may be volatility. Because when oil swings unpredictably, businesses freeze. Investments slow. Hiring slows. Expansion plans disappear. Uncertainty becomes its own economic tax. A $200 oil shock would not affect every country equally. Oil importing nations would suffer the most. Countries heavily dependent on energy imports, especially in Asia and Europe, could face severe economic stress. Meanwhile, major oil exporters could suddenly gain enormous leverage. Russia, Saudi Arabia, Gulf producers, Energy once again becomes geopolitical power. And history shows this is not new. Oil shocks helped shape the 1970s inflation crisis. They contributed to recessions, political instability, and major economic restructuring. Energy is not just economics. It is strategy, control, power. And when energy markets destabilize, the geopolitical balance can change very quickly. The modern economy was built for efficiency, not resilience. Companies reduced inventories. Supply chains became global. Everything became just in time, which works perfectly until disruption arrives. And oil connects almost every layer of this system. That means a major energy shock spreads rapidly. Food, transportation, manufacturing, retail, aviation, agriculture, chemicals. Almost everything becomes exposed. This is why energy crises feel so psychologically powerful. People may not understand central bank policy, but they understand grocery bills. They understand gas stations. They understand financial pressure. And when people begin feeling uncertainty everywhere, consumer confidence collapses. But perhaps the biggest lesson is this: modern civilization still depends heavily on energy stability. Despite all the technology, AI, automation, and digital economies, oil still matters enormously. And a sudden energy shock reminds the world how fragile globalization can become. Analysts now openly discuss scenarios where oil could reach levels once considered impossible. Whether oil actually reaches $200, nobody knows. But history shows something important. Civilizations rarely break from one single event. They weaken when multiple pressures collide at the same time. Debt, inflation, geopolitical conflict, supply chain fragility, energy instability, economic uncertainty. And when those pressures combine, systems begin to strain. Because oil is not just another commodity. It is one of the foundations of the modern world. And if that foundation shakes, everything built on top of it shakes too. If you enjoyed this video, subscribe for more stories about economics, hidden systems, global power, and the forces shaping the modern world. Because sometimes, the biggest risks are the systems people assume will always work.